Hi, let's talk about Binance Coin and how we can trade BNB, how we can time the market for BNB. It's quite interesting actually that not a lot of people talk about BNB, even though it's the fourth largest cryptocurrency. If we take away Tether, it's even the third largest, 1/6 of the size of Ethereum, but still not a lot of talk around BNB. Most people talk about Terra Luna, Solana, Avalanche. BNB though might be overseen as a almost hidden gem in plain sight. But let's look at how we can actually time this market. I've done a few back tests. Here are a few charts. I will go through all of those and I will go through the results of the backtest. The idea is you want to be in the market when the price is above a moving average and you want to be outside when the price is below. Thus you can somewhat prevent those bear markets, right? You're not in the market when something like this happens, but on the other hand, you can still benefit from the rallies. And that's in the end what we want, right? Now, for this backtest, I've not just assumed that we are outside of the market when the price is below. I've actually assumed that we even bet on falling prices. So the idea is we want to follow the price movements in a positive way when we are above, and we want to bet on a falling BNB price when the moving average is below the price. Now, the question with such a strategy is always, what kind of a moving average should you take? There's two variables to consider here. The first one is, of course, the length of the moving average. I'm taking here the daily ticks, right? So this is on TradingView, the day selection over here. And then you can change the duration of the moving average. I've backtested everything from 2 days all the way to 52 days. So quite a few backtests. But that's not the only thing I've tested. I've also cross-checked this with the exponential moving average. So we've got two kinds of moving averages that we are testing here, the simple moving average and the exponential one. The exponential moving average simply just takes the recent data a bit more into account. So it weighs the recent data more than the data that happened further in the past. It has some kind of a recency bias. Now, this is the best of the moving averages if we take the simple one, the SMA, simple moving average. It's the 50-day. And note, sometimes when we are bullish, we follow the price movements. In white, we've got the BNB price, and sometimes we bet on falling prices. So BNB is going down while our portfolio line here is going up. Now, the problem with this chart is it's on a linear scale, right? We've got 500K in difference. We don't really see what happened here in the early days. Let's toggle this to a logarithmic scale, as in now every unit over here is a 10x from one another. So we can actually see what happened in the early days. So you can see here during the Corona crash, I think it was, we were actually short. So we were betting on falling prices. The strategy does not consistently outperform, right? At the beginning, we actually underperformed slightly, but over the long term, it seems to be the strategy with less volatility and with better performance. So it's the 50-day simple moving average. Now, why did I take the 50-day? That's because of this chart over here. So this is a summary of more than 100 backtests. In black, we see the HODL line. So the return we would have gotten if we just held BNB over the entire data set, right? So that's this data set over here, starting in November of 2017. So that's the return you would have gotten by just buying and holding. Of course, this is no indication that we will still get that kind of a return in BNB in the future. I'd rather doubt it because BNB, as said before, is already that large. So I don't think we can 10x from here in just a few months. That being said, this HODL line is good as a comparison to how much better or worse do we perform compared to trading to these moving averages. And not all moving averages outperform, right? Actually, if we don't go somewhat extended on our duration, we are pretty much underperforming all the time for BNB. So I really have to go for the simple moving average at least above 30. And for the exponential moving average, because it is reacting quicker, we have to go even higher than that. 35 is the minimum duration we have to take in order to outperform just buying and holding. This simulation, by the way, it does take trading fees into account, so 0.1% per trade. It does not take any taxes or slippage or bid-ask spread into account. But I think for BNB, given that it's such a large asset, we probably don't have that much slippage. But trading fees definitely matter, right? 0.1% if you trade several times. Now let's look at the capital development again of the best simple moving average over here, right? 50 in duration. So here on the x-axis is the duration, on the y-axis is the annualized performance. The 50-day simple moving average worked the best, but here we've also got an exponential moving average that worked relatively well, right? Not perfectly, but relatively well. It's the 41-day exponential moving average. And so this is how that looks like. This is the 50-day SMA, the 41-day EMA. Right, so the EMA seems to be a bit smoother in its performance. It doesn't potentially have as much volatility, but also the end performance compared to buying and holding isn't that much better. Now there's a concept called buffer or moving average bands that we can apply over here. So let's look at those two moving averages. So we've got here the 50-day simple moving average in green and the 41-day, let me change this, the 41-day exponential moving average. Those two work the best. We are currently, by the way, bullish. So this is a time to be in the market and bet on rising prices for BNB. We could potentially, let's maybe only look at one of those now. We could potentially get rid of some failed signals. So for example, over here, right, on the 27th of December of last year, we would have potentially bought over here just then for the sake of selling the next day. So this is a bad signal, right? We are losing 4 or 5% with this single trade. This is not what we want, and it was simply just a random fluke, a failed signal over this moving average. By the way, for this backtest, I'm not considering crossing the moving average within the day. I'm only looking at the end of the day, so midnight UTC time. That's the prices at which we trade, but we still want to be outside of the market during such a move, right? And what you can do is you can use moving average bands. So let me show you this. This is a moving average band. Let's take the 50-day simple moving average, by the way. So here you can select, do you want a simple moving average or an exponential moving average? So simply search for MAB, moving average band. And then we can put some kind of deviation around this, right? Let's say 10%. So this would then mean we would ignore potential trading signals if we don't cross that threshold. So here, for example, let's take this early period here. If we only look at the moving average in isolation, we would have had quite a few failed signals over here, right? We would go in and out. We would quite often make bad trades, lose 4% several times in a row. With the moving average bands, we would only sell when the price goes below the lower band, and we would only buy when the price goes above the upper band. So whenever we move between those two bands, we wouldn't really trade. We would only buy when it's above, we would sell when it's below. And whenever we are very close to the moving average, we expect this to just be random noise to potentially make us bad trades. And when you do something like this, the question of course is, what's the average band that you should take? What's the best band you should take? Should you take 5% like this? Or should you take 1% like this? Or should you take any other kind of number? So that's the next backtest I've done. That's the buffer or moving average band width from the moving average to one of the sides versus the annualized performance. So for this simple moving average, I've taken this one over here, right? The 50-day simple moving average. And I've now added this buffer filter to this, the best moving average band, and 0.8% band seems to be the ideal, at least in the past. So that's way less than I expected initially. So we have to enter this here deviation of 0.8%. This is the ideal for trading BNB. So we do not filter out a lot of failed signals with this, right? We would have filtered out this failed signal here, but not many. But that's why we do those backtests, right? We want to get the results that might potentially not be that intuitive. Let's scroll in again. Here in the very recent past, we would have avoided these failed signals. That's probably a quite nice improvement, right? But as said, we are currently bullish. We are also above the upper moving average band. So with this strategy, we would have bought here on the 18th of March and then simply continued with holding, currently in a profit of 3.6%. Not a massive profit, right? We are relatively safe here with BNB. This is not a cryptocurrency to get rich on quick. This is simply just a risk versus reward play, allocating capital and hopefully making money out of this. So let's look at this again. This is now the simple moving average, the 50-day simple moving average with no buffer at all, right? And this is the return with the 0.8% buffer. So we can see the downside is mitigated somewhat here in the early days, right? That's why we get quite some outperformance. And besides that, the trades, they aren't that different actually. Now we can apply the same thing for the exponential moving average. Note the exponential moving average wasn't as good, right? The 41-day, this point over here is way lower than this point over here. But still, let's look at the optimal buffer. The optimal buffer is way higher. It is at 11%. This is also in line with what I've seen with a lot of other altcoins. When you look at Phantom, when you look at Ethereum, etc., you usually have the optimal buffer somewhere between 6 to 12%. So this kind of a buffer makes more sense. The 0.8% buffer here is a bit arbitrary. So one might even argue that we could just simplify this and ignore this. Maybe this is just random. But this kind of a buffer is probably not random. 11%, this probably does improve the EMA quite a bit. And this is the difference here. Look at this very, very different performance. So this is EMA without buffer and with 11% buffer. A very, very different performance. So as you might have already noticed, the design of these charts is not very fancy, but that's not the idea of this video. The idea is simply to determine the best strategies. The design is simply a result of Microsoft Excel. So I've done the backtest here in Microsoft Excel. We can simply in this Excel sheet input our data, the timestamp and the closing price. So in this case, that's for BNB. And then we get our charts made out of this. Now, I've even run now a macro. I've recorded a macro in order to automate the process of backtesting. So over here, we've got different variables, as in the moving average duration for simple or exponential. So all the blue values here are variables. So we can change the simple moving average duration, for example, to 25. And then we get our annualized trading return of 243, right? So we can change this over here. We can also change the EMA duration. And then here our buffer. How much buffer do we want to take? Then what we can also change is, do we want to only buy when the price is above? Or do we only want to short, for example, when the price is below? So this would be only shorting. This would be only betting on rising prices, or doing both at the same time, right? You want to bet only on rising, only on falling, or on both prices. So you can adjust this. Let's say we only bet on rising prices, then this is how our chart looks like, right? It goes sideways sometimes because we are simply in cash. If you only bet on falling prices, then of course the performance isn't as good. Still, it's better than slightly better than just being in cash. But yeah, that's basically the adjustments you can do. Now, this Excel sheet is behind a paywall. So that's for the premium membership over here, the bitcoinstrategy.com. So you can download this over here. The reason is there's quite a bit of work that went into this. So when you click here, iterate over SMA and EMA, let's maybe do this. Let's maybe only look at the long signals and be in cash when we are below. We click over here, we get the machine automatically running all of those back tests automatically. This flickers a little bit because it's updating and copy pasting, but that's basically it, right? So we now have our own back test based on the different moving average durations for SMA and EMA, depending on what we have entered over here for the fee, for example, or if you only want to go long. The same you can do here with the buffer. So when you've decided on your moving averages, so in our case, the 50-day worked well, right? The 50-day SMA and then the 41-day EMA. If you've decided on what you like to backtest with the buffer, you can also iterate here over the buffer. And it does the exact same magic, flickering magic, but I still like this. This is a quite nice tool. So what is this paywall all about? It's the Bitcoin Strategy Premium membership. So what you get here is daily market updates, how I currently see the market, right? Bitcoin, Ethereum, altcoins. There's also mindset videos. But what you're probably most interested in after watching this Excel sheet is here the statistics library. So you can see the different backtests that I've done in the past, and you can download each Excel sheet over here. And in the tutorial section, you can also see how I've built those Excel sheets or how you can modify those Excel sheets. I haven't just backtested simple moving averages, right? There's also RSI backtest, there's Bollinger Band backtest, all kinds of interesting tutorials, not just backtests, but also other stuff, right? So simply just click in here and you can see the exclusive tutorial videos. So currently the premium membership is a bit cheaper because so far we haven't rallied yet. So I want to keep the price fair for people that are still waiting for profits in crypto. If you decide though to pay yearly, you do get 2 months for free. Now, one more thing, and that's probably one of the major value adds for the premium membership. You also have a Telegram channel where you get automatically a message when one of the statistically important moving averages have been crossed. So I've backtested quite a few assets. Thus, we are bullish on Cardano already since March 23rd. So you get all kinds of interesting alerts here, right? The RSI is below 26. It's likely that the price will be higher 26 hours from here. And then there's the link to the backtest. So that's it for the premium membership. If you're considering to trade BNB actively, I think this is what you should be tracking, right? The 50-day SMA and the 41-day EMA. This is not my first video on BNB. I've got another one that looks at relative valuations to other layer 1 competitors. So Solana, Cardano, Phantom, etc. You definitely want to check that out. It's quite different content, but it has some quite interesting findings as well. So don't miss that video. See you there and thanks for watching this one. Bye bye.